In today's video, I'm going to cover the whole entire market in terms of Dow Jones, Nasdaq, and S&P 500, including the economic calendar. Now, I do post these videos up daily, so I highly encourage you to double check the latest video on my channel so that way you get the most up-to-date information. And before I get to the charts, I'm going to go over the economic calendar. And for Friday, September 27, 2024 at 8:30 a.m., we have the following: personal income, personal spending, PCE index, PCE year over year, core PCE index, core PCE year over year. And these are very important, by the way, because in terms of inflation numbers, the Fed regards these inflation numbers as highly accurate versus, or more accurate versus CPI and PPI inflation numbers. And they tend to look at the core PCE year over year and core PCE index. And in terms of the core PCE year over year, previously it was 2.6. This time around, it's expected to be 2.7, so a slight increase. But then, in my opinion, sometimes the media might, or the market might interpret the whatever is more favorable. In terms of PCE year over year, previously it was 2.5. This time around, they're expecting 2.3. So you could argue the media might say that the inflation numbers or inflation is coming down based off the non-core. And the core, it just basically has energy removed from it because energy is pretty volatile in terms of hypothetically calculating inflation. But the Fed, at the end of the day, will be looking at core PCE in terms of data points for the most part, regardless of what the media might say or the market might interpret based off what the media says, so on and so forth. That's just my opinion. Please do your own due diligence and research before buying and selling. Now, additionally, at 8:30 a.m., we have Advanced U.S. trade balancing goods. And then we also have advanced wholesale inventories and then advanced retail inventories all for August. At 10 a.m., we have consumer sentiment final. And then at 1:15 p.m., we have Federal Reserve Governor Michelle Bowman speak. Now, the market, in terms of pre-market, pretty much spiked up for Nasdaq and S&P, and then started coming down after. Jerome Powell spoke at 9:20 a.m. And then pretty much it was after they pretty much dropped. You can see about S&P, or I'm looking at ETF SPY ETF for the S&P 500, and then QQQ ETF for Nasdaq, and pretty much did the exact same thing. Dropped down right after not once they opened, but pretty much right after, and then consolidated and then just slightly spiked up towards the end of the day. So maybe the market is expecting decent PCE numbers, but we'll see. It's kind of hard to dictate right off the bat in the get-go for tomorrow in terms of the opening because you have to wait for the data points when they come through. But ultimately, I just want to state that the trend is more to the upside, and pretty much seems like it got reaffirmed, especially for the Nasdaq. So for the Nasdaq, I'm going to go first over that. And if you look at the MACD line indicates for a bearish or bullish movement. Now, I believe that was the 1 month chart right now, but if we look at the 1 year chart, so a little bit more prolonged, the 1 year chart is in the bullish movement, and it got more amplified with the solid green. And then there's some significance I'm going to show right about here with potential breakthrough. So it's quite important. And then the 5 year chart, yes, in the bearish territory, yes, it could get denied. It doesn't have to go up. Like, for example, when we're looking at SPY ETF for the S&P 500, there's a time that I was about to cross over the bullish movement. Right about here, you can see where it was the inflection point in a way, and it still came down with a solid red candle. So there is a chance to still get pulled down, but it's pretty much about to cross over for the S&P. But back to NASDAQ, even though it's going up, it could still get pulled down. But based off the 1 year getting stronger, plus I'm about to show Dow Jones as well, which is only 30 companies as opposed to, for example, S&P, which is 500. But indication is more to the upside, it looks like. So for the NASDAQ, and the reason why I'm stating that as well is because if I zoom out to the 5 year chart, there's an upward trend resistance line dating back since 2010. Mind you, the market was still going up, doesn't mean it wasn't, but every time it went up, it got knocked down. And then in 2020 to 2022, broke through. And then we came back underneath. We tried to test it in March of 2024, broke through in July of 2024. The whole entire market created all-time highs, Nasdaq, S&P, and Dow Jones in July of 2024. And then we came back underneath, the market got pulled down. And then here's the upward trend resistance line dating back since 2010. Now, in August of 2024, we tried to break through the upward trend resistance line dating back since 2010. Had a couple of false breakouts, but ultimately could not necessarily pass it, got pulled down. And then we're approaching it to test it again, but pre-market just completely destroyed through it. And then on the way down, we basically came back underneath it. And right now, even in after hours, it looks like we are testing it. Now, mind you, my lines are not perfect, so this could be just sheer coincidence. But the question is, are we going to have issues passing it, or are we going to break through like we did in 2020 to 2022 and in July of 2024? In my opinion, I think so, because again, like I stated, with the 1 year chart reaffirmed, solid green, it looks like it's pretty much set. 5 year chart, it's about to cross over. And then if we look at the Dow Jones, again, that's ETF QQQ. In case you're wondering, just to go back quickly, It closed at $489.47, and that line to cross over the 2010 level, it's pretty much close at it right now. So essentially, the longer we take, the higher the high will be, but about $491, I would say, based off of my lines potentially not being perfect. So $491. And again, we could see false breakouts, right? There's been times false breakouts. We had a false breakout today too as well. Doesn't mean necessarily we'll go up. We could still get pulled down ultimately. Again, for Friday's trading day, I would say it's more dictated by the market. So, or in terms of data points for PCE inflation numbers. So if inflation numbers show that it's coming down, the market will go up in my opinion, because it's expecting bigger rate cuts from the Fed. If the inflation numbers are not necessarily showing that inflation is coming down, then the market might in the beginning potentially come down additionally. And then maybe if it's still trapped by the resistance levels, and then the fact that the S&P and Dow Jones are all-time high levels, give or take, then we could probably start seeing a pull. But indications, again, for the time being, past Friday's trading day is showing the in the market isn't an uptrend. So I'm not expecting crazy pulls for the time being, especially, for example, the Dow Jones. Now, the Dow Jones in the 1 year chart, bullish movement. Yes, you could argue it's been pretty much slowing down, but it looks like we might get an uptick. So in my opinion, if the inflation numbers show that it's coming down to more PCE inflation numbers, I think it'll add like a higher catalyst for the upside. For example, Dow Jones, and then the Nasdaq's really primed to go up, it looks like, for the time being. And then the alt chart as well, it looks like for the Dow Jones is still strong as pretty much as before. And again, like I showed 5 year chart, the Dow Jones is the strongest one for 5 year chart. Now the S&P, and by the way, the one reason why you could potentially expect a pullback is, again, the Nasdaq is at a 2010 level, pretty much around the ballpark. We could see false breakouts. Dow Jones is all-time high zone, right? If I zoom in a 3-month chart, you can see right about here. Previously, it was all-time high was right about here, and we're pretty much within that zone. S&P, we're at the all-time high zone as well. So zoom out, all-time high. Yes, the S&P has the same thing as the Nasdaq, upward trend resistance line dating back since 2010. If I zoom out, mind you, the market was still going up, just every time it went up, got knocked down. And then we're in the mid zone, so there is more room to go to the upside for the S&P. But the thing is, though, in the mid zone, we've seen times we get pulled down as well to the upward trend support level and bounce off it as well. So, but either way, the trend is to the upside, except for the S&P might see some slowdown, but I think the tech sector / Nasdaq might pull it up anyway, regardless. And Dow Jones is still showing strong uptrend as well. So Dow Jones and Nasdaq, Dow Jones is showing a strong uptrend. Nasdaq is primed to start showing a stronger uptrend, I would say. Not stronger than Dow Jones, but stronger than the past. And the 1 year chart for the S&P, it's still in the uptrend, even though it's potentially slowing down, potentially. And then the 5 year chart, it's about to cross over as well. You could see a green tick right about here forming. And then the alt chart is pretty much the same as the Nasdaq 50-50 split. And that's basically it for today's video. Essentially waiting for the PCE inflation data points, seeing how the market reacts from that. And then from there, expecting uptrend for the time being, maybe some consolidation because we're at certain levels, for example, S&P and Dow Jones being at all-time high zones, give or take. And then the Nasdaq being at critical points dating back since 2010, trying to break through, besides for the fact that it'll have false breakouts and consolidation. But if you found this video beneficial, consider dropping a like. It does help the channel. Thank you so much for that. And I do post these videos daily, so I highly encourage you to follow and subscribe. Thanks again for watching. Appreciate it. Take care. God bless and peace.